This is how my journal on TradeZella looks like. I had 175 trades, 77,000 profit. There were some losses in the beginning and now and then, but it was mostly upstream until I got these unrealized losses, and these are not showing here, but you can see some losses, lots of profitable trades. It was going well until now. Just for the sake of transparency, journals do not show you unrealized losses and unrealized profits, which is very important because it's very easy to change that and manipulate to look like you're profitable, but you're actually not, like me. This is embarrassing video for me to make because I'm losing about $100,000 in unrealized losses at the moment, and I thought if I'm already going through this, I should record a video and maybe be the first person who will show you how I'm going through 100,000 of unrealized losses and how I'm thinking about it. And maybe in next 6 months, I get out of this situation. So just to give you context, everything was going well. And in the last 6 months, since I started trading, I earned about $77,000, which is about 25% return on my initial investment. And I was just learning. I already had the money in my portfolio from before, added a couple of and added some money together with what I had and started trading options, and I loved it. And I already pulled out about 10,000 out and I spent it, which is all amazing. But looking at 100,000 unrealized losses is not comfortable. But that's what makes this video interesting, and maybe you want to watch it until the end and see how I'm going through this. So what happened is everything was going well. I was in profit, in realized and unrealized profit. Realized about 77,000 now, and unrealized was still in profit. And then what happened is one day, for no reason whatsoever, I just bought 100 shares of Meta, AMD, Nvidia, and I think Google or some other stock. And I covered calls on these stocks at break even basically. And the premiums were high. 2 of those got executed. I earned about 5% on each, and Meta got assigned. And because Meta got assigned, I was in trouble. So basically Meta dropped about $150 or whatever, from 750 to 600 and less now. And while it was dropping, I bought another 100 shares at about 650. And now that makes my initial position not 100 shares at 750, but 200 shares at average of 711. I'm still in huge losses on Meta compared to my other positions, and together with that I have a couple of other gambles that I opened for no reason whatsoever. My strategy was working perfectly fine, and I decided just to mess around and try things out. And that's how it works. Every single trader I know does the same mistake that I made right now. And in some of my companies, I have the privilege of seeing over 400,000 traders active every day, seeing how they trade. I don't go into details, but I see how many are profitable, not many. And those who I know personally, which is just a few that are profitable, are not making these mistakes, obviously. But some things you cannot learn, you have to go through them yourself. So that's why I'm recording this video. So I'm going to share my screen and show you what's going on here. All right, so what you can see here is my portfolio at the moment. What you see here is huge losses on CoreWave, Meta, Figma, and the biggest problem are those gambling stocks, which have pretty good, one of which has pretty good financials, and everything else dropped for no reason whatsoever. And this was just a pure gamble because I also am in iGaming industry, so I see what's going on. And a couple of those were interesting, but let's ignore those. Those are stupid, pure stupid losses. Let's focus on CoreWave, Meta, and Figma. Figma is a good company. I think they're gonna recover. Probably it will happen in the next 2-3 years. I'm ready to wait and just cover calls until that happens. And at some point, I'm going to be break even and earning money on options. Next thing is Meta. Right now it's 586. It could go down to whatever, 520, where the next support level is. It dropped from 750 to 580. I think just considering the market, Meta is an obvious win long term, and I think it's going to recover in the next 6 months. But even if it doesn't, I'm just going to cover calls here. And CoreWave, I think this is completely undeserving price. My average is 111, and I think it's also going to recover pretty soon. So I gotta be careful with what I do. I won't go over these other positions. These are not an issue. I'm going to trade in a similar way and just repeat what I did before. So let's see what's going on here. So if I look at unrealized positions and I see those where there's no other potential earning potential, profit potential, I'm just going to close them and open new positions. Of course, there's a big risk that, for example, CoreWave, I covered the call at 110, which is basically my break even, because I have 107, which is break even. I got to cover calls somewhere around 107, which is pretty risky, because if I don't have good options available, I'm either going to earn very little amount of money, or I'm going to have to roll it higher up so that I don't lose the stocks, because I want to continue trading with those shares. Similar thing with Meta. I will probably not have even close to good positions on Meta, but let's do step by step. So I'm just going to close Peloton, or whatever it's called. It's done. I'm going to close KView. That's done. I'm going to close CoreWave, and I'm going to close both positions. And then what's left is BigBearAi, Big Bear. Closing that one. And then what's left is Archer. Also an amazing stock. I wouldn't like to lose this one, but I'm going to close it. And the last CoreWave, I'm going to close this one. And now I have these stocks, and I want to trade those stocks before just losing them or closing them, instead of just closing a trade in realized losses. So what I'm going to do is go to QuantWheel dashboard and generate income. I'm going to first check CoreWave. What I like to do is see what's the highest available option in the next 0 to say 25 days. And then the highest difference in price. So my break even is around here. That's 10% yearly equivalent. And what I'm going to do is consider either this one or this one. And I'm not going to complicate this. In case the price grows so fast that in 24 days it goes closer to 108, I'm going to roll the option and just increase the strike price. So what I'm going to do is find this option here expiring on December 12th for CoreWave. I'm going to go here, options. This is the option chain, 12th of December, and 108 stock price. This is here. Let's wait for it to load. I have 800 shares, and I'm going to aim for a 0.8 market, 0.8 price, and sell. All right, let's see if it gets executed. In the meantime, I'm gonna go back here and look for the next one. Archer. So I got 1000 shares of Archer. Very nice stock. I would like to lose it, but I'm going to go at break even at 9.03. Going to QuantWheel, go to Archer. Let's see what's here, what's available. About $9, 10 days, 26% yearly. That's a pretty good one. I'm gonna go with this one. I want to keep this stock. So November 28 at $9. Yep, that's correct. 1000 shares, not a big yield, not a big premium, sorry. I don't care about the market price, the spread is not too big. And I'm done. That's Archer. Or let's see, BigBearAi. I got 1000 shares. Big Bear. Same thing. I'm gonna go see the price difference. Break even is 684. I'm again gonna go with break even, but I'm gonna go with this one. I don't care if I lose. BigBearAi. 7 December 12th. We just continue doing this and earn 1% per trade, 0.5% per trade. I don't care if the price of the stock of underlying goes up or down. It's just a matter of time. I'm going to be back to break even. Let's go to the next one. This is how I'm going to get out of this position, guys. CoreWave, Meta, Figma, all the high quality stocks I can get out of. Stocks that are a problem are GAMB, for example. I'm going to show you. The problem is this stock doesn't even have good options. There's just one. I can also go on higher strike price, longer expiration, but I really think this one should explode to $10, $12 in the next 6 months, so I don't care. KView, I got 16.5 average. All of them are pretty good yields. I'm gonna go with this one because I don't care if I lose it again. December 12th, 16.5. All right, that's about break even. Maybe I shouldn't be too greedy. It's just 2.2% yield. It's very low. So what I'm going to do, I'm going to give it a little bit more time, see what's there. Let's go with this one. 17 December 19. 17, that's correct. All right, let's go with this one. Market. This one's done. KView is done. Meta, I won't touch. NVO, POE, Peloton, and PayPal. Peloton, PayPal, and I'm done. Okay, so Peloton. I don't like the stock. I want to get rid of it, to be honest. They have a partnership with OpenAI, so I think it's gonna go well long term, but I'm gonna sell at the break even. So I'm gonna go with this one. 8 December 19. Okay, that's done. PayPal is the last one. I got 200 shares of PayPal. And my break even is 69. Alright, so PayPal is a good example of a stock where you get stuck. Right now it's 59, my break even is 69. That's $10, that's about 17% difference. And the yield is very low and you have to wait for a long time for the option to expire. And what I can do is just go with the break even and just wait. Yeah, December 19th at 70. Why am I doing this? Because I want to generate cash flow at the worst case break even. Right now I need to release the funds and I don't care if I get assigned. I just want to make sure that the stocks that I own generate income while I wait. Alright, so that's basically it. So right now, as I'm recording this video, I am at 106,000 in unrealized losses, and that's euros. That's about $115,000. Today, realized was 800 from options, premiums, and I'm just gonna continue doing this. If I continue earning 1% on my portfolio per month at a minimum, which is really a minimum for me, I'm going to get out of these unrealized losses, because most of the stocks that I own and most money is in the stocks that are very good quality, and they will recover sooner or later. And I don't mind to wait as long as I can sell covered calls at break even. I'm going to continue squeezing out the premium and get back, hopefully. And this is why I'm recording this video. It's very uncomfortable for me to record this, because it's just a stupid mistake that I did. I was in a very good position, earned pretty nice premiums and $77,000 in last 5-6 months. Just stick to the strategy, and then as soon as I went into complications, I started losing money. So I'm not gonna lie. I hope this helps someone trading. Just stick to what you know, what works, and hedge. Always hedge. Be happy with 1%, 2% per month. Just continue doing that long term, because after 2-3 years, you're gonna be happy you did it. And if you manage your trades well, you're just gonna have a good show of how a profitable trader should trade. I'm gonna get out of this sooner or later. Even if I lose some money, I'm fine with that, because I already earned about 40,000 in profit, or whatever the euro amount is. If you like this series, continue watching. I'm gonna show my trades in the future videos. I'm gonna talk about products that I'm building. My primary business is building businesses. This is something that I do for fun. I'm enthusiastic about it, and it generates income, which I like. And yeah, see you in the next one.